Let's get back to Eric Robertsen, Global Head of Research at Standard Chartered Bank, joining us from Sydney. You've listed 8 potential surprises for 2021. We're going to try and go through all of them, but what is the biggest on your radar that you think could be another black swan event for the markets?
Sure, Matt. I mean, I guess, thinking in the most immediate time frame, we have the runoff election in the state of Georgia in the United States, which could give the Democrats full control of Congress. The markets have been, I think, quite relieved at the prospect of a divided Congress, for the next 4 years, because I think that would be viewed as limiting some of the more extreme measures that the Biden administration might put into place. But if you were to see the Democrats take full control of Congress, a number of their plans would get put into place, reversing some of the tax cuts, taking a stronger stance against technology stocks, energy stocks, et cetera. So I think that could be very disruptive in the very short term. We had that in the first week of January.
What are the chances that you think we won't see the Republicans control the Senate?
Our math at the moment, Matt, says that the odds are still less than 50% that the Democrats would take full control. But, you take into account statistical significance, let's call it 50-50. The only thing I would say from a market point of view is that even if the Democrats were to take control of the Senate and therefore Congress, they would have a relatively slim majority, which may impede their ability to be as aggressive on some measures as they would like to be. So we'll have to see. We'll know in a few weeks.
Right. Another one you've got, Joe Biden steps down as president and VP Kamala Harris becomes the president.
Yeah, look, that one is obviously not something that we are anticipating or forecasting, trying to have, quote unquote, a bit of fun with potential scenarios. Look, that one would certainly be destabilizing to markets. We haven't had a U.S. president step down in a very long time, and certainly in the current global environment, I think people would view that quite negatively. Obviously, the probabilities of an event like that have to be viewed as less than 5%. But again, just something to throw out there.
Very quickly, a final one. Euro dollar falls to 106 on a double-dip recession and political discord. We were just talking about Brexit earlier, and it doesn't look like we'll get a deal there, perhaps.
So look, we've been constructive on Brexit for a while. It has been a difficult ride. We've also been constructive on the euro going into next year. But as I think most people appreciate, the European recovery story, the euro recovery story, has been one that has disappointed investors a number of times. And so I think if we were to see a significantly negative outcome, either on the economic recovery side, on the COVID side, or even some political developments, I think there's quite a bit of potential for disappointment to hit the euro area currency.
Eric, thank you very much for joining us. We have to wrap it up there. Eric Robertsen from Standard Chartered Bank.